Wake up, buy here, pay here people. It's a beautiful day. Go grab yourself another cup of joe and say hello to Jim and Michelle Rhodes on the Buy Here, Pay Here morning show. Take it away, you two.
Good morning, everybody. It's a happy Friday. It's going to be, we're like really excited for this show today. We were busy this morning during our coffee time, which is supposed to be not about work, but it tended to today to be about work.
Happens sometimes.
And just kind of jotting down a lot of things to talk about and, different questions to ask. But before we get to that, a couple of quick things.
Announcements.
March
March 30th event.
30th. Make sure you've got it on your calendar. That's the all-day live stream event that we will be doing from a studio in Salt Lake City.
Doesn't matter how long you've been in the Buy Here, Pay Here business.
There's going to be a lot of good, rich content that, and good information coming from that. Also, Monday. We have Chuck
Bonanno joining us. Looking forward to catching up with Chuck. He's always fun to talk to. Got good ideas and a smart guy.
And Chuck will be joining us for that event on March 30th as well.
Right. Sure.
So, anything else you can think of?
So.
Any jokes, wisecracks?
Oh, there's always jokes, but none are really appropriate.
Okay, nothing.
Yeah.
It's Friday. Let's get to business.
Yeah.
All right. So today we are really, really fortunate to have two great individuals that work in the reinsurance world, and Mr. Tim Byrd and Taylor Byrd, that they work with Dealer RE. And we're here to kind of talk to them about some of the components of reinsurance.
Yeah, a little background. I've known Tim for many years. Tim, you and I met a long time ago at one of the conferences, I think. We don't see each other as much lately. I've been seeing Taylor out there on the path more
on the circuit.
On the circuit, but that just happens to be the way it's worked out lately, I think. But I've known these gentlemen a good while, and so I'm happy to have them here. Smart guys, they know this reinsurance space, and so I'm happy to have a chance to have our listeners get to know them. And by the way, Mr. Taylor and Tim Byrd, our listeners, we're up to like 7 people now for listeners. So it's quite an audience.
Yeah.
No, we obviously have dealers tuning in from all over often. And so it's a good opportunity for us to educate them about reinsurance in general. I got a ton of questions for you today, so I'm excited to have you guys here.
Yeah.
Tim, why don't you start with kind of giving a background on Dealer RE as a company and your background?
All right. Well, thank you for having us this morning.
You're welcome.
I started this company in 1994, and so we're in our 29th year. Been around a long time. I was in the car business prior to that, an old F&I guy, and then I was hired years ago to train F&I guys. So that's where I got my start, and so now, fortunately, I have a couple of fine sons that have stepped into the business too, and they are taking away the day-to-day.
Nice.
The circuit.
Yes.
Good for you.
So taking the circuit and the day-to-day stuff. So it's been a blessing.
And those who don't know, Tim, yes, you're right, folks, by the dialect. He is in the Carolinas. You guys are in North Carolina, right?
I'm in Virginia. He's in Carolina. Yes.
Oh, okay. Gotcha.
There you
Very
go.
Good. So Taylor, how about you? You want to tell us how you came to be involved in the reinsurance business? We heard Dad's version.
Sure. Yeah. First of all, thanks for having us this morning. Good to see you guys. And so I grew up going with my dad to these dealerships. He started the business when I was 2 years old. I remember specifically every Christmas we would go and take cheesecakes to car dealers that were our clients. I remember that very vividly. So I grew up and I ended up I grew up in the business. I ended up going to school, and I majored in biochemistry, thinking that potentially I might want to be a doctor or something of that nature. But I decided I didn't want to go to any additional schooling. And so my dad here, Mr. Byrd, as I affectionately call him, has a very good business, and I interned with him for a few summers, and I started learning the business and realizing that it was something that I wanted to jump 2 feet into, and so I've been working at Dealery for I guess I'm coming up on 10 years here soon. And so, like he said, I've kind of taken over a lot of the day-to-day operations. We have a growing team and, a growing account basis. And so you've seen us at the circuits. But yeah, really blessed to be a part of a family business. And my brother works with us, and so does my little sister. So
Nice.
Other great employees. So yeah, that's kind of my story so far.
You made the right choice, Taylor. Those doctors, in my experience, they really only make a living when they're out there doctoring. Whereas in your case, you can make a living and still be getting paid for all the work you've created.
Yeah,
so good for you.
Yeah,
you made the right
having
choice.
to be out there doctoring.
So let's talk about, do you guys really try to serve the Eastern region, or kind of what area do you guys serve?
We have dealers from Hawaii to Maine to Florida to Texas and everywhere in between. We're a national company, and of course, it didn't start out that way. I was just a local guy serving a local region. But one of my dealers, his name is Tracy Myers. I don't know if you know Tracy. Tracy told me one time, he said, "You are the brand, stupid." And he wrote a book about that.
Oh, nice.
And he encouraged me to go national and to write books. I've written 2, Taylor, or been a part of 2, and Taylor's been a part of 1, just about the car business, and write a lot of articles for the Buy Here, Pay Here magazine for NIADA.
Right. Very good. We see those. Go
so
ahead.
The thing is, that has allowed us to grow, and this is such a great business. And so the Buy Here, Pay Here space, the independent dealer, is just a terrific area in which to work, and just great people.
A lot of great people out there for sure. So for those listeners tuning in, we might have a few out there that really don't know much about reinsurance at all. So we want to give them a little
run
bit of
across
background.
dealers every once in a while. We'll see in some of the Facebook streams, like, what is reinsurance? How do you feel about it? And so there are going to be
there's a lot of stuff to talk about. We can talk first just about reinsurance. Like, I'll give my kind of high level view, and then you guys can add what I'm leaving out. Like, dealers who haven't been exposed to reinsurance, it's an opportunity for them to sort of self-insure, for kind of a broad explanation, to create their own insurance solution. For today, we're going to talk about CPI and GAP, but there are a multitude of products that you can run through a reinsurance company, which lets you profit as the dealer and create solutions for your customers in the process. So, that's kind of my high level way of thinking about reinsurance, and you guys can tell me what I'm leaving out. Taylor, you want to tell me what I missed on that?
Sure. I mean, no, you pretty much hit the high notes. Essentially, it's just a insurance company that you own separate from the dealership. It's a separate corporation. It's a C corporation owned by shareholders, usually matching or very similar to the ownership of the dealership. And you can do products like warranties, service contracts, CPI, GAP, and other products for Buy Here, Pay Here dealers. It's a different way to kind of maximize your deals and also create solutions for problems that are inherent to the Buy Here, Pay Here business. And then ultimately, there are some tax benefits to having this company as well. And the profits are taxed at the qualified as a qualified dividend when you pull it out as a dividend. And so there's some benefits there as well.
I don't think people want to hear about taxes before noon, so we won't talk about that.
Yeah, we don't need to do that.
But there are some real savings there for sure. I think the other thing I always tell people, look, when you watch Super Bowl on Sunday, there's a reason State Farm can afford to run those expensive commercials, right? There's a lot of money to be made and so today when we talk about CPI, it's like there's a lot of money to be made in insurance. So we're definitely talking about a profit center. And I can tell you, when people ask me about, when should I get in the buy here, pay here, or when should I get in the reinsurance business, I always tell them yesterday. It's kind of my answer to that. Always is like, it's something that when you understand it, you'll see you want to start.
And a lot of dealers that we talk to, that they've been in business for 5-10 years, and then all of a sudden, they come across reinsurance. It's like, now is the time. They've maybe have drugged their feet. Once they get in, they just shake their head. It's like, why didn't I do this earlier? Why didn't I do this earlier?
I'm sure
that's our number one regret that we hear from dealers.
Of course. Yeah. So I'm sure we have dealers chiming in today who are listening, who could, affirm that it's one of the smartest things that they've done for their business. And, the way I've said it to folks, and we can get around talking about CPI here in a moment, but I always just say to folks, look, there's, Tim and Taylor can tell you all these tax advantages and all these wonderful things you can do with the positive cash or profits that you're going to generate over in that company. But if I think about CPI or warranty, and I think about if I could just self manage a lot of that instead of having to, enforce insurance outside, and I could reduce my charge offs and make customers happy faster, that alone would be worth a lot to me, even if I didn't enjoy positive cash in that other company. So when I have both, I mean, gosh, it makes a lot of sense. So for me, having been a dealer myself and lived in that world, it's like, boy, the customer satisfaction piece of this alone is huge. So we're glad people tuned in to kind of hear, what it is about reinsurance and why it makes a lot of sense to kind of self-manage that. So Tim, maybe take us first through CPI. First, it's collateral protection insurance, right, is what that stands for. And so maybe just help our listeners kind of high level. What is the CPI product? Yeah. What is it, and why should I have it if I'm a dealer?
Well, CPI is, as you said, collateral protection insurance, and it is an actual insurance product. Whereas, say, GAP, for instance, is a waiver in most states.
Okay.
CPI can best be described as, a lot of people think of it as force-placed insurance. And in every state, there is different laws governing when CPI can be applied. Sometimes it's time of sale, sometimes it's 30 days after sale or whatever. But remember this, it is the lender's insurance. It is not the consumer's insurance.
Okay.
It is there simply to cover the lender in case there is an accident and the customer has total lost the vehicle, and so they owe the lender, and this keeps the lender from losing his not only the collateral but the balance on his books. So the great thing about this is that it two things. One is insurance is just regular car insurance out there is so difficult. We spend so much time in this business being collectors for the insurance industry. And as you said, look at the Super Bowl or go to a city and see who has the biggest buildings. Okay.
Mm-hmm.
And so we know that it's very lucrative. One thing too, it's important to point out is that insurance earns out based on term. Okay. So if you ever wondered why you have a 6-month insurance policy and it renews every 6 months, because at the end of 6 months on your regular car insurance, or if it's even a year, it's earned out. That premium then turned into underwriting profit for the company or the shareholders or whatever. And it's the same thing in reinsurance. Reinsurance earns out. So CPI is a way that dealers can protect their collateral because that's incredibly important. And what happens many times is we find out that somebody's insurance has lapsed, a few minutes after we got the letter, a call from them saying they totaled the car. And so it's a very frustrating thing. We have a dealer in South Carolina that had told us that they were spending 40 man hours from the time they found out that there was a wreck to the time that they actually settled with the insurance company. Mm-hmm. I mean, add that up. Add up your man hours that you're losing because of that. Or how many man hours are you spending just in collection to make sure that, hey, you're not paying your insurance. I'm going to have to come repossess you. Well, they may be paying you well.
Yeah.
And unfortunately, a lot of dealers kind of hold their nose and turn their head hoping that nothing happens. And, and they have to sleep with that at night.
Yeah.
So by having a reinsurance company and having CPI, today if they didn't pay.
Yeah, that's a good point. It's like the other thing too. Well, and you also know where the claim money is sitting.
That's right.
You already know.
You know the outcome of what
Right.
it's going to be.
Right.
Because you don't have to wait for some adjuster to come out and make his decision.
Sure.
Because it's your reinsurance company.
Which means, so going back to that thing about if I'm a dealer, I know that if I get a call and there's an accident and I've got a customer on my CPI program, that I know that I don't have the same level of angst. Like you talk about the soft cost of all those man hours. And I'm thinking about just the headache factor of just knowing that if I'm the dealer, I know that I can quickly move to put that customer in another car because I know there's a claim check available and I can absolutely make the customer happy today.
And if you don't, somebody down the street's going to.
Right.
Okay? If they have to sit there and have the pain of you, they still got to get to work. They, go to school, go to church, whatever they're going to do.
Sure.
And if they don't have a vehicle and you're not ready to move, then somebody else will.
Sure. So Taylor, you might help just for our listeners who aren't familiar, the CPI does not replace the liability. You might just help our listeners understand that part.
Sure. So, let's go through that really quickly. So a lot of times we talk about making sure that customers have full coverage insurance, right? And so full coverage is made up of comp and collision and liability insurance. Okay. And in every state, liability insurance is required by the state. Okay. You as the lender, more often than not, are requiring the comp and collision piece. Okay. And so we can refer to that as physical damage insurance, which protects your vehicle and your vehicle only. Okay. Liability insurance pays for property damage and bodily injury done when your customer's at fault in an accident. Let's say they run into another car or hit a mailbox or whatever. Okay. So that's what liability insurance pays for. Comp and collision pays for your vehicle and your vehicle only. CPI can replace that comp and collision, okay, to pay for your vehicle and your vehicle only. And one thing I'll point out, because some dealers may say, wow, I have a lot of totals or I have a lot of wrecks. Well, the thing is that CPI also really should only pay, okay, when your customer's at fault in the accident. Because if your customer gets in an accident and somebody else is at fault, their liability insurance should be paying you to repair or replace your vehicle. Okay, so CPI will usually only pay, okay, for accidents when your vehicle or your customer was at fault. Okay, now it will pay if the other customer is not insured or there's some problem with that. Okay, with their insurance, it will pay, or you can file a claim against your CPI policy to repair or replace your vehicle. But more often than not, you can get an insurance check from somebody else when somebody else is at fault.
Gotcha. Michelle, you had something?
Well, I was just like CPI, we as dealers can say, we require that state requires that you have liability.
Right.
And then can a dealership force place and just say, this is an insurance policy that we are requiring to have on the vehicle. It's very similar to the comp and collision, but we do it internally, and that it's not a choice to the customer. Is that something that you?
No, the thing is that you can't require. Okay. What you can require is that they have collateral protection.
Okay.
Where they get it is up to them. Okay. As long as they provide you collateral protection, and that's on most retail installment contracts, that they have collateral protection. What happens a lot of times, either number one, they have lapsed their insurance, and so you force place CPI, or they just see that CPI is cheaper and they'd rather go that way.
So is it typically cheaper than most of the insurance companies for buy here, pay
Yes,
here customer?
but that's also going to depend on demographics and that kind of thing.
Yeah.
So another thing that comes up in CPI is I see that the premium's going to be the same for every consumer, regardless of age and driving record. Am I right?
Well, go ahead, Taylor.
Yeah, it depends on, some states, ratings for the CPI policy, which is issued to the dealer, okay, are, some portfolios we set up one flat rate, okay, doesn't matter vehicle, doesn't matter anything, okay, which one flat rate's always going to be $110 a month, okay. And some scenarios, dealers may have a wide variety of inventory. Okay, they may have 50% of their stuff is under 10 grand, and 50% of their stuff is over 15 grand. Okay, so in that scenario, we will set up multi layers. So basically, you may have a rate at $105 and a rate at $135 or something of that nature. Does that make sense?
Yeah, but it's driven off of the car, not the insured
customer.
It is never based on the consumer.
Okay, and so that's dictated by the state on whether or not you can have tiers.
Yes. So, example, we have a factor that we have to multiply versus the amount financed in the state of Virginia. Okay, so every deal is different based off of the amount financed, and the interest is also included in that. So there's a factor that we use a portal for on the ABP business that we do. Okay, that will give the dealer the amount that the CPI is going to be, and it changes per customer based on the amount financed. That is one state that it's that way. Okay, there are some other states that is that way. Most states we can get away with doing just a flat rate program, and we can do multi tiers. It just depends on the book of business that we're working with.
Gotcha.
I have to pause and do a disclaimer. Jim and Michelle Rhodes and the guests of the Buy Here, Pay Here morning show, we're not attorneys, and we're not familiar with some of the items discussed may be state specific. So seek advice of your reinsurance specialist. Okay.
Yes.
That's it.
And your state. Yeah.
So I think it's important for everybody to understand. A lot of these things we're talking about are state specific. So it varies. So some of the things we talk about, may not apply necessarily, but I think it's important to understand that it's a nice solution, for any dealers out there to have that opportunity. It might be a little different in their state, but Tim, you might explain too, the thing that we also hear come up is debt cancellation, that terminology. Like, how's that different from what we're talking about here?
So debt cancellation coverage is, it's the official term is voluntary debt cancellation coverage, is a waiver, just like GAP is a waiver.
Okay.
And like, I guess it's most akin to when you go rent a car, they say, do you want that insurance? Well, that's not insurance. It's a waiver. And what you're saying is if, Mr. Customer, if you will pay me $50 a month, if you total loss your vehicle, then I will waive your debt completely. Okay.
Mm-hmm.
Now that can be done at time of sale. And again, every state, Texas, for instance, has a percentage that you can charge. And, but a lot of states are just a flat, you can set up a flat rate. It is, we have seen in the last few years, more interest in CPI, I think, because debt cancellation is set up just for total loss. It's not set up to cover damage. If a customer just damaged a car, CPI is, but it's more expensive. CPI is more expensive than debt cancellation.
Gotcha.
And, if I can jump in real quick, one reason why debt cancellation is kind of fading a little bit is because you guys may remember, but there was a time when buy here, pay here ACVs were $3,000 to $5,000, and it was a good car. Well, now those cars are a lot more expensive.
That's true.
Okay. And now a $3,000 or $5,000 car gets in an accident. Okay. It's usually totaled. Okay. But you get an $8,000, $9,000, $10,000 car. a lot of the times it's not totaled, and debt cancellation does not pay for anything that is not total lost. Okay.
Yeah.
And so CPI does pay for damages. Okay. Minus the deductible, obviously. It also pays for the value of the vehicle if the car is total loss. Does that make sense? That's the reason why debt cancellation, in my opinion, is kind of fading into the background, and CPI is being more,
Right. And we just saw yesterday, I think I read, where used car prices jumped up in January again, So it's ever moving market out there, no question about that.
Right. And whether I'm if I'm a third party insurance claims adjuster, or I'm a claims adjuster through my own reinsurance process, it's hard to keep up with the book values, right? I mean, those folks are having a hard time keeping up. And so the ability to keep this thing in house, to me, that's just one more reason, I think, to
Absolutely.
have it in house, right?
Jim, I had a dealer tell me one time, and you had alluded to this earlier, if I didn't make a dime off of reinsurance, it makes me a better dealer.
Oh, good.
It makes me a better dealer because I am able to service my customers better because I have control. I have not ceded control to somebody else.
Sure.
And that's what happens with insurance or warranties or any of those things, is you're ceding control to somebody else.
Yeah. No, I get it. So I think we can move on to and I should stop. I should have said at the beginning of the show, look, we typically try to keep these around 30 minutes, but I knew today we had a ton to talk about. So if you guys are good, we got a couple other things to talk about. So Tim, maybe start us out with the thing about GAP. Like, what is it as a product? It sounds like it's something that we can reinsure. And then also, is it optional to the consumer? We give the customer an option. It's a product that we can sell.
Can I take this one?
Yeah, go ahead. Taylor has a good story.
I'm very passionate about GAP for buy here, pay your dealer, so that's why I asked to take it. So GAP, yeah. So right now, when you have a customer that's in a vehicle, okay, and they get in a total loss and they still owe you a balance, okay, 99 times out of 100, buy here, pay your dealers are writing off that balance, okay. That balance is called a deficiency balance, okay? And that's what GAP pays for, okay? So basically, by writing off that balance, you're giving the customer GAP for free, okay? Mm-hmm. In almost every state, and again, this is state specific, okay? But you can sell customers GAP for $400, $500, $600, okay, put it in the retail installment contract and charge your 25% interest, okay? And now you're being compensated for giving that debt, which you were already doing previously, okay, for free. You're now being compensated for it, okay? And so there's no added risk. There's only upside to that, okay? And so you can take a portion of that cost, okay, let's call it $250 or $300, which is approximately what you might pay on the third-party market for a GAP policy, okay, and send it to your reinsurance company. And so ultimately, I think it's one of the biggest no-brainers for buy here, pay here dealers to do in a reinsurance company because, again, there is no downside. You're already forgiving the debt anyways once you get your insurance payout. Might as well charge the customer for it. And no, you cannot force the customer to purchase it, though. Okay. It is something that you have to sell to the customer.
Well, and that's something that was a two-part question I was about ready to ask. One, it is an optional thing for the customer. So I completely understand the benefit to the dealer in doing GAP. Tell me, what's the pitch for the customer for doing GAP?
Well, the pitch is that, basically, Mr. Customer, you're still responsible. I mean, so we're looking at from the dealer standpoint, they're going to forgive the debt. Okay. Mm-hmm. The customer doesn't necessarily know that they're going to forgive the debt. They're still responsible for that. Okay. And they could, the dealer could go after them for the debt. Okay. Mm-hmm. But by purchasing a GAP product, which, by the way, a lot of these customers know what GAP is, okay? And they even ask dealers about GAP because some of them have been in situations in the past
Sure.
where
Okay.
the dealer or the finance company did go after them for it. They didn't have it, and that's maybe why they have bad credit right now.
Good luck.
Okay. Gotcha.
And so ultimately, you know, for the customer to pay an extra $15 a month, or, you know, if you do it by that by biweekly payments, $7 every 2 weeks, to not worry about the, you know, a balance being left over if their car is, you know, totaled, stolen, etc. Then, you know, that's why a lot of customers will opt in. And as the lender, okay, you can make it attractive for the consumer as far as payments, because, you know, most of these customers are payment buyers. You can alter the financing, okay, by extending the term maybe an extra month, and the payment is the same as it was before. They're just paying an extra payment. Let me ask you a question. Why do you think CAC is, you know, obviously a huge subprime finance company? Very few of their deals are financed without GAP and a service contract, okay? And they're a very successful company. The reason being is because that helps their loans perform better, and it also creates an additional profit center for them. And so that's why we talk to our buy here, pay here dealers, because you're basically in the same seat as a CAC. You're a finance company, okay? Try to get a GAP and a service contract on those deals in order to help yourself to make those loans perform better, and then ultimately be more profitable.
So Tim, let me play the part of a dealer. I see you got something else to add to that. Maybe you can add it here. So let me play the part of a dealer. You guys just presented to me all the benefits of CP or of this GAP product. Now, I heard you say that I should remit around 250, and maybe in my state I'm able to charge about 500, right? I'm a buy here, pay here dealer. My customers I'm already kind of stretching the customer on payment and term because of the miles on the car. I tell you, I just want to charge $250 to my customer because I'm making 20% interest on that $250. I just want to charge my customer $250. Now, talk me out of it, Tim. Why shouldn't I do that?
Why shouldn't you just
charge
add $250? Because it becomes an expense to your. Most of these dealerships are S corps. Some are, you know, LLCs, but the thing is that if because your reinsurance company is a separate corporation, then you get to write off that GAP expense just like you would if you added tires to the car. Okay, so you're taking it out of your dealership, you're sending it to your reinsurance company, and as long as it's in your reinsurance company, you can put up to $2.4 million a year in there and elect to only be taxed on the investment income. So, you know, that's an expense. So you're expensing it out over here. If you just took $250 and put it in a drawer, you have to account for that, and you have to pay taxes on that. And so that's the biggest benefit, is to make sure you put it in your reinsurance company, is that you're not paying taxes on it. You're actually reducing your tax burden.
And I may not have asked the question correctly. Like, I'm just saying, why wouldn't I just charge whatever I'm going to remit to the reinsurance company? Why wouldn't I just charge the customer that? What's the justification for putting some additional markup on that?
Well, it's up to the dealer. You know, most dealerships do add some to it. Some just don't see the need to, just like you're talking about. Yeah. And you know, Jim, if you talk to 100 different buy here, pay here dealers out there, you're going to get 100 different opinions.
Maybe 104. Yeah. Yeah. No,
so the thing is that you know, everybody. I mean, it's amazing how many dealers we run across that my customer cannot pay another dime. Okay, well, the price of cars went up tremendously, and they're paying another dime. I can guarantee you. Right, so the thing is that it's important that we protect ourselves, and if you can do it and make a profit too, and have more control, that's pretty much a no-brainer.
Yeah. So Taylor, to bring you back in on that, you followed that kind of scenario. So I guess the other thing I'm hearing is that even if I just put another $200 of markup in that $200 of profit I can manage well over in my reinsurance company, right?
Yeah, absolutely.
Yeah.
Yeah. So, I mean, just to go back to your original question that you asked him, I mean, if you don't want to mark up that gap contract, you don't have to. Okay.
Mhm.
Ultimately, we want the customer to be able to afford the payment, et cetera. You can't, if you can't collect it, then it's not, doesn't mean anything. Okay. But yeah, most of our clients do mark it up $200, $300, $400. Okay. And that's just some extra cushion at the end, just some extra profit for the dealership or the finance company.
Let me just add to that too. It also allows the dealer to collect the premium better, okay? Because he's spreading it out over the term of the loan.
Right.
All right. So if you only put in the $250, then if you spread that out over the term of the loan and the guy gets halfway through it, he certainly didn't pay you the $250.
Got it.
However, if you had booked in $500, then you probably would have been closer to actually collecting the premium that you paid in for it.
I see. Okay.
Got it. And there are a couple of things I just wanted to address. I'm going to bring these
sure.
back up. George Spat, offering gap is also a white hat benefit, because that's like our thing. White hat way. Many dealers say they will roll the unpaid balance into a customer's next loan, and that's definitely not to the customer's best interest, because then they end up having a bigger loan for a car that's not. Yeah. And so there was also a question by one of our listeners, Facebook user, if cars are 15,000 plus in total before CPI reserves are adequate, is there a stop loss insurance product a dealer can purchase?
Not that I know of.
So is that kind of like what you were saying, that when you do like the gap that's a little bit bigger, it kind of it helps?
Well, what they're alluding to is somebody just starts today.
Oh, okay,
And
gotcha.
the first thing that happens is they lose a car. Okay. The great thing is that by owning your own reinsurance company, you can file the claim down the road a bit once you have built up some reserves. But it can happen. I mean, we see it happen occasionally where not just CPI, but what if it's a service contract? They've sold one service contract, they put $500 away, and they got a $2,500 claim. So what do you do?
Yeah.
Those things, that's a possibility, but in the long run, it will bear out actuarially, and in the fact that you're going to have you're going to have adequate reserves to cover all your claims.
The thing is,
unless you're just blowing out the McDonald's bags and putting it on the front line, I mean, that happens too. You can't expect to rebuild your inventory on your reinsurance company. And just like anything else, I want to point this out because it's very important. We have to work at this. If you're going to have a shop, you got to work at it. If you're going to have a finance company, you got to work at it. If you're going to have a reinsurance company, you got to work at it.
Yeah.
And if you do, there is not any other aspect of the car business that has a better return on investment than reinsurance. It just doesn't. No question about it. We have a dealer that recently, they had several partners, and one of the partners had put in, I think, $400 to start. Okay. He was a sub partner, and his portion of the company today, now this has been about 5 years, but his portion of the company today is worth almost $300,000. That was a pretty good return on investment.
I would say so.
Yeah.
Wow.
Yeah.
So I had a dealer tell me, you guys know the dealer, I won't say the name, but the dealer told us not long ago, he said, I can foresee the day, like I could see it in my projections, that the reinsurance company will eclipse the profit in my car dealership. Right. Yeah. And that's even in the finance company. So, you definitely got somebody there who's supporting that. So we should probably start to wrap up.
Taylor had something.
Yeah,
did it get covered? What you wanted to say, Taylor?
Oh, I was just going to say that reinsurance in general, and specifically CPI, okay, other products as well, but specifically CPI, we just have to remember that it's about building a portfolio. So going back to that question about if you have an early loss, yes, that is a obstacle that we have to overcome. Mm-hmm. But if we build a portfolio of your accounts, okay, you are diversifying that risk over a large number of accounts. If you have a very small portfolio on the CPI program, it probably doesn't make sense, right? If you got 15 accounts on a CPI program, it's not going to work out in the end. But if we can over a year time frame get over 75 or 100 accounts on a CPI program, it's going to work out for you.
Sounds a little like the State Farm model. So
Well,
Exactly.
yeah,
it's very much like the buy here, pay here business.
yeah.
I mean, if you're scared to put a CPI policy on your $15,000 car, but you're not scared to put the $15,000 car out on the street.
Right. Good point. Yeah.
Yeah.
That's true. We are in the kind of the risk game, aren't we? So,
Yeah.
That's right.
yeah. But yeah, I follow the numbers. We've had a number of dealers. Michelle and I work a lot with startups, and we know it's challenging when the dealer's brand new, but we certainly want them to understand from day one, because like we say, they ask, and we like to put it in the modeling from the very first time we talk to a dealer. We like to show them in the modeling. This is something that you need to be prepared to kind of build into your financial plan, because it's as we can tell here, it's a huge a profit opportunity. And just all, like I say, the former dealer in me just says, wow, profit aside, if I can make my customers happier more quickly and spare those charge-offs, I mean, I could save myself a ton of money and headaches right there. So,
Absolutely.
we just know there's benefit in that alone. So we should probably wrap up there. You guys have any closing thoughts? Taylor, you first.
No, I don't really have any closing thoughts. I'm looking forward to hopefully seeing you guys back on the circuit here soon. I just want to say thank you for having us on, and buy here, pay here dealers. Think about GAP and your reinsurance companies, and CPI too. But GAP is really, man, I just, for whatever reason, I think it's a no-brainer.
Tim, you mentioned dealers there, so it'd be probably a business write-off for you. We might want to think about doing a reinsurance summit in Hawaii. If you guys, then we could add that to the circuit. So
hey, I like that.
Yeah.
There you go.
Yeah.
Tim, did you have anything that you wanted to add before we let you go?
Well, we certainly appreciate y'all having us today and giving us an opportunity to talk to our folks out there, and just keep this in mind that we need to keep God first in our lives. And I am certainly looking forward to seeing all of you at NIADA. We will be there in June. So I think the NIADA has some special things planned this year, and looking forward to that. I hear there's some good news coming out of there. I think going to be announced today. So looking forward to hearing about that.
You should be quiet.
Yes.
We can't be.
So to get in touch with the folks there at Dealer RE, I would say probably best Taylor at dealerre.com.
That's perfect.
All right, excellent. So if you have questions or want to contact them, Taylor at dealerre.com.
And we know how to find them. You can always reach out to us.
Yeah, you can always reach out to us if you want to find them. So thank you both so much. If you would stay backstage for just a few minutes till we close out, so we can give you a proper thank you.
All right. Thank you.
All right. Well, good stuff. Really great information.
Yeah.
And I learned a little bit.
I did too.
And I know that with reinsurance, there's an awful lot more to unpack. So, we'll be bringing different things, different pieces of reinsurance to the show so we can talk about it and so people can have a better understanding, because there are quite a few dealers out there that aren't familiar or that have been dragging their feet for whatever reason. So we just really want to be able to help you make that decision to include reinsurance.
Yeah.
So,
sorry we ran a little long today, but we think it was a ton of good information.
Yeah. So. Thank you so much, everyone, for joining us. We really appreciate you taking your time out a little bit longer. And we will see you on Monday with
Chuck Bonanno.
We'll talk to you later. Thanks, guys. Bye.